Hello and welcome to the status report overview for SKAGEN Kon-Tiki in April. Let's start by taking a look at the highlights for the month. Kon-Tiki was down 1.5% during April, underperforming the MSCI Emerging Markets Index by 0.6% on a relative basis. Year to date, the fund is down 3.3%, which is 1.2% behind the benchmark. We added to several positions during April and sold down several others. More on this to follow. Emerging markets generally now trade at a 30 to 35% discount to developed world markets, which is the highest relative valuation gap since 2006 based on price to book value and price to trailing earnings multiples. The historic valuation discount has grown larger recently as investors build in greater risk premiums to invest in emerging market equities. The Kon-Tiki portfolio remains attractively valued both on an absolute and relative basis, with the fund's top 35 holdings, which together represent 72% of the portfolio, trading at a weighted PE of 6.9 times versus 10.9 times for the index, with a combined upside of 42% based on our current target prices. Now let's take a look at the month's largest contributors and detractors during the month. Tullow Oil, a 1.5% position in the fund, was the top contributor during April, with its share price boosted by a healthy interim management statement and the sale of UK gas assets. It was followed in the performance table by two Indian companies, with State Bank of India and Mahindra continuing their impressive share price performance year to date. On the downside, Great Wall Motor, a 3.8% position in the fund, was the largest drag on performance, as the Chinese auto manufacturer announced first quarter results below expectations due to higher costs. Naspers, a 1.3% position, was the second largest detractor, amid concerns about the South African media group's 34% stake in Chinese internet company Tencent. Now let's take a look at what changed in the portfolio during April, and it was a busy month. We increased our stake in Vale, the Brazilian resource company, using share price weakness due to lower iron ore prices, which we believe is overdone. The stock remains attractively valued as Vale's share price has suffered much more than we think is reasonable compared to peers based on its results and outlook. We also increased our position in Lenovo. The Chinese technology company has a long track record of superb execution. Lenovo recently acquired the Motorola mobility handset division from Google and the IBM server business, and unlike the market, we believe they will be able to turn it around. We saw during the month that high-quality internet-focused and solar stocks experienced a broad sell-off, and we used the temporary weakness in share prices to add to our positions in Kinnevik, as well as our solar stocks Yingli, GCL Poly, OCI, REC Silicon and REC Solar. On the selling side, despite volatility in the Russian market, VTB Bank's share price has held up well and outperformed its peer Sberbank during April by 10%. We took the opportunity to trim our position on strong days during the month. We also reduced our holding in Ranbaxy Laboratories after the company received a bid from Sun Pharma, India's leading pharmaceutical company, in a $4 billion all-stock deal. The share price increased by 30% during the month. Finally, we continued to reduce our holding in Royal Caribbean. The share price reached an all-time high on the 31st of March since it listed 21 years ago. That's it for this month. Thank you very much for watching, and for more information please visit the SKAGEN Kon-Tiki section of the SKAGEN website.